All right, welcome everyone to this week's weekly recap and outlook. I'm going to be really doing my best to do a better job at having consistency with both these weekly uploads and also these daily uploads. Also, if you're new to my channel, my name is Jake. I make daily videos on market recaps and ICT concepts. So if you like that kind of thing, definitely consider leaving a like and subscribing and checking out my completely free Discord. The link to that is in my bio. With that, this week is going to be a great week to look at. We had a lot happen, as you can see here, and so it's a great opportunity for us to dive into the charts and learn and figure out exactly how we can be better prepared for future weeks to come. So I'm gonna start out by getting rid of everything. I just wanted to give you like a little bit of a preview of what things were gonna look like. Actually, real quick, just to show you for reference, this week was a bullish classic expansion week. This is where on Monday or Tuesday. So first, if you don't know what this is, there are types of weeks that are statistically more probable than a random week. The three most common ones are an expansion week, a reversal week, and then consolidation reversal. So this one was your regular expansion week where you push into a key level somewhere around Monday or Tuesday, and then you expand to the upside. You can see the candle will typically look something like this, and that is exactly what this candle looked like. So the key level that we pushed into, so now I'm going to get rid of this. And also, it's important to take a look at the economic calendar. We had news coming out on Tuesday, Wednesday, and Thursday. So those were the days that I was looking at to expand toward whatever our target was going to be. And our target ended up being taking out this giant range of highs here. The market loves to come back and seek to run through old highs and old lows. These highs up here were really, really good liquidity for taking profit at, because people know that when the market comes back up here, that people in this range that went short are going to have to buy back for a loss. So they know that they're going to get their orders filled. And so that's essentially how the market moves. It moves to fill orders for institutions. So here, anyone that bought or short sold in this range, the market came back during CPI and stopped them out. So going into this week, Tuesday, Wednesday, and Thursday were the days that I was looking at for our target to get hit. It was this range of highs here. Okay, let's start from the very beginning and let's go over everything you could possibly ever need to know about this week. So got rid of those images as well. So first of all, you have to understand, or you have to know what key levels are on all time frames. This is something that I didn't realize initially going into this week, but now in hindsight, it is very obvious. We had a giant monthly fair value gap. It is from this high of the wick prior to this candle, and then to this wick after following this candle. So it's a sequence. It's a series of a fair value gap is a series of three candles where the high of the wick before and the low of the wick after don't overlap. So here you have that monthly fair value gap here. And so this was the higher time frame level that orders were getting filled at, and at which point there was good liquidity above. So they know that this can be the first area where they can offload their positions. When I say they, I'm talking about institutions as well. So not only did we have this monthly fair value gap, but we took out a key liquidity pool. So when I say liquidity pool, I'm talking about a specific kind of high or low. Like not just random ones work too, but not as good as specific ones. And so in this case specifically, you can see we had previous month's low. See how this is the low from the first day of December? Specifically, the markets run on highs and lows of specific times. So low of the month, low of the week, high of the month, high of the week, low of the day, high of the day. So here we had previous month's low. If you drag this over, you can see that we end up sweeping this low here. And since this is a key time-based low, this was a really good low to frame a reversal off of. And not only that, but we actually had a previous week's low right here as well. And you can see that right here if I pull up this indicator, previous week's low and previous month's low. So I'm not making this up. Those were actually previous week's low and previous month's low. So we sweep both of these out. And also, something else that I didn't mention before is we also push into a daily key level. So this right here, this is a swing low. So you have a high or low, a lower low, and then a higher low. So these three form a swing low. The low of the candle body here, this is a key level. It's called a rejection block. So just remember that for the future. I mean, it's kind of a lot right now if you're new to my channel, but just hang in there and just keep watching these videos, and you'll keep getting better. So this is a daily rejection block, and so you can see here that not only did we come and fill this monthly fair value gap, but we pushed into a daily key level, this rejection block here. So with all this in mind, and knowing that Monday went lower into this key level, this daily rejection block, we could possibly frame that this week might expand to the upside because we have really good highs to target above. We have all these highs to target above, and we have a data high here. So if you don't know what a data high is the high or data high or a data low is the high or the low of a news event. So this was the high of news that came out on Friday. I can't remember what it was, but these will be drawn to with higher probability than just regular highs and lows. So anyway, with all this in mind, since we pushed into that daily key level and then also that monthly key level, we could possibly frame this as a classic expansion week towards the other side of the range here, especially because we took out these key time-based levels here. So with all that in mind, we had all of this generated liquidity here. The market wanted to come back and take this out, and you can see we then go up and take this out. So this, whenever you see a series of lower highs like this, this is called low resistance liquidity. The market loves to come back and run through this because what's happening when the market comes back up and aggressively runs through all these highs, it's stopping everyone out that went short in this range. And then same thing if it ever looks like the other way around. I don't have any examples right now, but like same thing, if you ever see this on the other side, you know that the market's going to want to aggressively run through that with force. So anyway, you get that aggressive move higher. You'll note that if I measure out the standard deviations of this final move down here, so if you don't know what standard deviations are, it's like basically like you take the final manipulation of the model that you framed and you project out one standard deviation of that manipulation move, and then two, because what's happening is when the market comes down into this level, institutions are filling orders here, and they need places to offload their positions, and they don't want to overcomplicate it. So what do? They use standard deviations and they take profit at the -1. See, there's taking profit happening there. The -2 to 2.5 is often another area, And you typically want this to overlap with some kind of liquidity because um, that's where they know that they're going to be able to um, get their orders filled, because they know that there's going to be people panic selling for a loss up here, right? Or short sellers that are going to have to buy back for a loss is what I meant to say. And then same thing possibly up here. We have these highs up here, so this 4 to 4.5 lines up with them. But that's speculation right now. We'll just have to see if we do end up coming there. But essentially, you can frame this as a buy model. And yeah, if you had just known that Monday pushed into this key level, this monthly gap, then you could frame the rest of the week as a classic expansion week. And so check this out. I think this is so cool. Now, I did end up making 2 different predictions, so I'm not going to say, oh, I knew for sure this was going to happen. I had 2 different ones, but this was one of my predictions. And this was my pre-week outlook. And check this out. Before the week even started, I listed this as a possibility, where I had that rejection block below, and then we had a daily order block above, so from one key level to another. And you'll know as well, something I didn't mention earlier, is this monthly gap, it is actually in discount of the higher time frame range. So it makes sense. The market wants to move from discount to premium. So if I measure this on the daily chart here, if I take this from this low to this high, measure this out, typically you just want to do the most obvious low and high. So in this case it was this low and then this high. You can see this monthly fair value gap was placed just barely in discount. And so it's a level that you would make, it makes a lot of sense to see a reaction off of. We get that monthly fair value gap, and then we get that move higher. And so anyway, going back to that pre-week outlook, you can see here that I did frame this out as a possible classic expansion week, noting that we still had all this liquidity above, the data high above, and we were pushing into the statistical low of the week. That's what this red line is. If you don't know what that is, it's something called StatMap. It's like created by this guy named Joshua. You should go check him out. But essentially, it's like the statistical low of the week and the high of the week for both. If you have a bullish week, it's just a statistical low of the week and high of the week for bullish weeks and then bearish weeks. So in this case, let's go back here. We have here's StatMap. So in this case, you can see here are our weekly statistical levels. Statistically, on average, on a bullish week, you will go to this red line here. So you want to pair this with some kind of key level or some kind of liquidity. So boom, boom, weekly M plus. And then where do we go to? We go from the weekly M plus to the statistical weekly distribution level, which is aligned above all of these highs here. So right from one statistical level to another, the weekly manipulation to the weekly distribution. And as well, you'll note that we also went to the monthly one as well. Check this out. We have statistical levels for the month as well, and our statistical low of the month was also hit right here. And so we went to the statistical low of the month. One possibility is we could be drawing to the statistical high of the month here. So we'll just have to see. Now, I'm not saying that has to happen, but yeah, we'll just have to see. And but since we got this good reaction off this monthly gap, I could see us continuing higher. Now, I'm going to be conservative, and I'm going to be analyzing as I go every single day. If you want to see my analysis, or if you want to just hang out and and talk with us in the Discord. Join the Discord, and we'll look at things more together. But yeah, um, right now, like I do see us possibly going higher in the short term, but we'll see. Like I make bad predictions all the time, and I'm just trying to get better. So every single day I get better. Something else I did not mention initially, but is relevant, is we also had this regular trading hours gap. So this is essentially the gap that forms between the actual close and open during so like it's the actual gap of the regular trading hours. So between the close at 3 p.m. and the open at 7:30 a.m. Whenever it closes, I can't remember. But that regular trading hours gap is a really really good draw. It's a really good target. The market loves to come back to it because that's all the overnight liquidity. The market loves to come back to that overnight liquidity, and so you can see here that if I turn it back to electronic trading hours, this was also a really good draw for CPI, and you can see we ended up moving back towards that high with good momentum. And then something else I have not mentioned yet is, well, why did we react here? Well, we do have a nice 4-hour breaker block right here. You can measure this out from the body or the wick, and in this case I'm going to just measure it out from the wick because it clearly worked better from the wick in this case. So breaker, here's this 4-hour breaker, and then that was the low of this lower time frame model to go run this low resistance liquidity. So you can see how within higher time frame models you will get these lower time frame models. So you constantly always want to be framing models to outline where the market's going to go for your lower time frame trades. It's always going to make your lower time frame trades higher probability, so just keep that in mind. But yeah, I think that mostly covers everything. The only other thing I was going to say is if I pull up new week opening gaps, you can see that not only was this a monthly fair value gap, but this was also the low occurred in this new week opening gap here. So the market loves to draw to these, and as well you see how the candle bodies respect this new week opening gap here as well. So I know there's a lot of these on the screen. It's kind of chaos, but typically you just want to only look at the last 8 or 7 or whatever, sometimes 5 or 4, just depends your own personal preference. But yeah, we held this new week opening gap, and then we held this new week opening gap pretty well. And so with all that in mind, just for fun, let's make a prediction going into this next week. Just please take my predictions with a grain of salt because I'm still trying to get better. But one possibility I see is, since we are moving out of a monthly key level and we swept previous month's low, I would expect this to be a decent sized model. I don't think we would just go and react off this monthly fair value gap if we weren't going to at least go to this 4 to 4.5. And this makes sense because this 4 to 4.5 does line up with this RTH gap. So I'm going to go to regular trading hours here. It does line up with this regular trading hours gap up here, and the market loves to come back and draw to these areas, so it makes sense that it might come back up here. And then as well, you'll note that if I measure it out from standard deviations of the final move down on the 2 hour, let's try that. Let's measure it out like this. You see the -1 lined up with this high so far. So it is possible we get some kind of a retracement, and then we move up to the -2 to 2.5 above this high. So one possibility for a retracement, this is totally hypothetical, please keep this in mind. be smart. Don't do anything stupid. I'm still trying to get better right now, honestly. But one possibility is, we do have this breaker here overlapping with this fair value gap. So the series of up close candles here. So this breaker block overlapping with this fair value gap. If it'll load. One possibility is we come back into this area before continuing to expand towards our 4 to 4.5 standard deviation. That seems like the most likely outlook to me, but we'll just have to see. As well, a really good level that you can use that I'm just gonna give you a little. This is like a secret gem, since if you're still watching this video till now, you deserve to get a secret little gem. But the fair value gap in discount of a breaker block, this is called a Reaper fair value gap, and so these are really strong levels. So one possibility is we do come in and test this Reaper fair value gap before we get our expansion up to this 4 to 4.5 standard deviation. So we'll just have to see. It's possible we end up turning around and everything is just completely wrong. And I had a couple weeks ago where that did happen. So please take everything I'm saying with a grain of salt. But I am trying to get better. I'm trying my best. Join my Discord, and we'll hang out in there. So I will see you guys next time.